The stock market is a complex beast. It reacts to countless factors. One of the most significant factors is global trade. When countries engage in trade wars, the market takes notice. Trade wars create uncertainty. This uncertainty makes investors nervous. Trade wars involve tariffs and other barriers. These barriers disrupt the flow of goods. They increase costs for businesses. These costs are often passed on to consumers. This can lead to inflation. The recent trade wars have been particularly impactful. They have targeted major economies. These include China, the European Union, and Canada. The tariffs have affected a wide range of goods. This has created ripple effects throughout the global economy. These trade disputes have consequences. They impact both Main Street and Wall Street. Understanding these impacts is crucial for investors. It is also crucial for anyone interested in the global economy. March 2025 was a tumultuous month for the stock market. The S&P 500, a key market indicator, entered correction territory. This means it fell 10% from its recent peak. Investors saw trillions of dollars in wealth vanish. This correction was not limited to the United States. Markets around the world felt the pressure. The technology sector was hit particularly hard. Tech giants like Apple, Microsoft, and Amazon saw their share prices tumble. Several factors contributed to this downturn. Rising interest rates played a role. However, the escalating trade war was a primary driver. The uncertainty surrounding tariffs made investors risk-averse. This led to a sell-off in the markets. The March 2025 correction serves as a stark reminder. Trade wars have real consequences. They can impact investment portfolios. They can also stifle economic growth. The recent trade wars were ignited by the Trump administration. These tariffs were aimed at protecting American jobs. They were also intended to reduce the trade deficit. However, they have had unintended consequences. The tariffs have hurt some American businesses. They have also led to higher prices for consumers. For example, tariffs on steel and aluminum have increased costs for manufacturers. These costs are often passed on to consumers in the form of higher prices. The tariffs have also strained relationships with key trading partners. The trade war with China in particular has been contentious. It has led to retaliatory tariffs from China. This has further escalated the trade war. The impact of these tariffs is still unfolding. It remains to be seen whether they will achieve their intended goals. However, one thing is certain: they have created uncertainty and volatility in the global economy. The future of the global economy is uncertain. Trade tensions remain high. The possibility of a full-blown trade war looms. This uncertainty has made businesses and investors cautious. Some analysts believe that the trade wars will be resolved soon. They argue that cooler heads will prevail. They point to ongoing negotiations between the United States and its trading partners. Others are less optimistic. They fear that the trade wars could escalate further. This could lead to a global recession. They argue that the political will to compromise may be lacking. The outcome of these trade disputes will have far-reaching consequences. A prolonged trade war could have a devastating impact on the global economy. It could lead to job losses, higher prices, and slower economic growth.